Hi folks, Scott here, and this is the wrap for Friday, August 2nd. Let's talk about what Monday may bring us. Markets are still live. I've got to wrap it up a little bit early today. But we had an interesting suggestion from someone in a trading room to look at fading gaps on the first Monday of a month. Mondays tend to be problematic in general when trading, gaps in either direction. But how about the first Monday when you're above the 200-day moving average? So the first Monday of a month when above the 200-day moving average. So I'm still running my trading room charts here. Computer's a little slow. There we go. A couple things stand out. A 2-to-1, almost 2-to-1 odds of gapping up on Monday, which is, you might think, is surprising considering we're probably going to finish with a 50-day high close or somewhere near. I'd be surprised if we got a big sell-off into the close personally. More likely, I think, to finish with new highs and or a new high close. Regardless, this is just first Mondays of a month when above the 200, regardless of market condition. And you show that it's happened. We've had 47 up gaps after such a scenario historically versus only 26 down gaps. Down gaps using an end-of-the-day stop have had a very high win rate and profitability. Now, I use intraday volatility adjusted stops, which we call our MTG stop parameters, 30% of the 5-day ATR. Excuse me. Looks good, which is a good place to start your analysis, but I'll rerun these numbers for our members in the morning using our MTG stops, but at least at a glance it looks okay. And up gaps using an end of the day stop, not good, less than 50%. That's way below the normal 70% average. So an up gap on Monday looks to be a little riskier than normal. I even ran these numbers for members in our trading room just now using following a 20, 50, and 200-day high close, assuming we do that, which is an assumption, thinking that may actually make it show that we're stretched to the upside and may make these numbers improve. They did not. They did not. Also, remember, Monday's the 5th calendar day of the month. That'll show up in our worksheet. It's generally a risky day for shorting up gaps. We'll see with these market conditions if that still holds true. And not sure. That's it that stands out to me right now. Been a pretty narrow range day. Could end up with an NR7. Maybe we had one yesterday. Most narrow range day of the past 7. Not sure. Our worksheet will be posted possibly tonight or more than likely later this weekend. I normally post it on Friday nights, but since I'm traveling, I may not be able to. Anyhow, I'll have it open before the markets reopen Sunday night. All right. Let me show you what the worksheet, speaking of which, showed going into today. Odds for gap direction were mixed. There was no clear edge, so unlike the day before, I did not go long. Just 50% chance up, 50% chance down. Right, these two opening areas, which is just the aggregate of all of the different zones, possible zones from data indices, gap guides, just 50-50. A gap down between the close and the low, which is what we had today, was a slightly attractive 67% win rate and a 1.2 profit factor. Up gaps on day of monthly, which by the way, for time's sake, I'm not going to show you, but the individual gap guides, basically 5 of the 8 met my criteria for trading to the long side. But we also had further evidence. Down gaps on the day of the monthly jobs report generally has been positive, slightly attractive, certainly not bad. Down gaps after an unfilled up gap during a bullish market, real strong numbers. Down gaps after a 10-day moving average down straddle, very strong numbers. Down gapped after an NR7, slightly attractive. Nothing showing any significant risk there, unusual risk. Last night's video down gaps, very positive after an unfilled up gap, 20-day high close and closing at least 0.5% higher. That was strong. Heat gaps. We had a gap down today inside the body of a green candlestick. The members download area has lots of information on it. I've also done articles for a variety of folks on the web on these heat gaps. But basically, it's a 2-day momentum pattern to the long side. You buy a down gap inside the body of a green candlestick as long as you're above the high of 2 days ago. And under bullish markets, 15 of 18 wins historically going into today. Real strong numbers. So bottom line is we had positive data, slightly attractive, positive, if being down in the UCO zone. And the worksheet showed mostly positive factors for fading gaps in either direction. So I said I'll fade a gap In the ES, if it opens above 1702, which was above the 4 p.m. close, I pay attention to where the ETFs would be filling their gaps, and that was the level, relative level in the ES. Or if we open down by at least 2 points, because the close for the ES was 2 points above this, 1700.75, with a reduced position size. And the concern here was the NASDAQ was gapping up. I generally don't trade gaps, certainly not small gaps in opposing directions. I thought the data was good enough, and if it pulled back, so it was at least a 2-point gap, the size of the gap would be pretty nominal, and the NASDAQ wouldn't put too much pressure, potential pressure, if it decided to fill its gaps. And the rest of the data was generally positive. And frankly, one way to look at it is that the NASDAQ gapping up shows that it's a bullish market scenario. The NASDAQ could lead. So it was worth me trading with a reduced position size. That's what I did. And went long at the open in the ES. Was filled 1698 and a quarter to the long side. Took a little bit of heat here first. I told people just relax. That's why I call it the heat gap. You never know. About half the time you're going to get some pretty significant volatility, but more times than not, majority of the time, you'll get buyers stepping up behind the dips in such a scenario for the heat gap. So happened to be right on today. We survived this adverse excursion. Our low fade numbers came out. I don't trade the ranges normally when I'm in a gap, but they were positive to the long side for the low fade in both the 15-minute and first hour guides. And I did have a member report getting along on the low fade, and I think some others did as well. And made a sweet 4 points, which was a really great way to do it. Got his whole trade, got a delayed entry, combined with the gap. It was a nice way to do it. I didn't do that. I was long 98 and a quarter. So 98 and a quarter, and set up my core count to scale out about 2/3 at gap fill, exactly 1 tick in front of the highs, and I talked about it ad nauseum right after I set it up this morning. I used a slightly bigger stop too to get it at least 2 points below yesterday's low, so I used about a 6.25 point stop to get it down that 92 level, and I just held on. Got out for plus 2.25 points on the first target, and then had to tighten my stop at that point. That was my core target. I did have some decent data favoring the extended target today. Wasn't going to let it turn into a complete loser, so tightened my stop to 1 tick below the lows. Took some heat, looked like I was maybe in trouble. Well, the trade was in trouble, but then it reversed and ran all the way up to my second target, which was 2 points above. In fact, I'll show you. Gap fill. Well, gap fill was 1700.75. Extended target was either 2 or 2.25 points, depending upon which way you rounded, above that number. That's how you calculate that. That to that. So I set up as 1702.75, and while I was out for a lunch meeting with my team, it ran up to 1702.75, filling some of our members, but not filling moi. A little frustrating, but that's called trading. Came back, prices were here, we bounced a little bit, now we're coming back, and I have to leave at 3 o'clock in 30 minutes. So what I've done is I've tightened my stop because it worked. It beautiful, almost too perfect. I just want to go a little tick higher. I'm not willing to let it reverse all the way back down to the open, which it could. So I'm locking in a 1.5, meaning I've got my stop just below that wick on this last part. I could have closed it out. It did what it was supposed to, and I just didn't get filled. A little bit of rotten luck. I'm willing to risk a point to the downside, basically, from the time I got in return for possibly catching a move up to test the highs, which I've got sitting at 1703.50. It's not looking like it at the moment. It's probably going to get me out on this last part for plus 1.5 points, but still ends up basically a 2-point win. Not bad. Good decision, good trade, and a bunch of people made some money today, so that's always fun in the trading room. That's it. We'll see you Monday. Have a great weekend. Take care.